All right. So definitely a pretty decent bounce yesterday. Did not make up for all the downside on Monday, but then again, at least it was a bounce for what it's worth. There was really no, I mean, for me, there was really no story of the day. Usually there's always a story of the day. There really wasn't one yesterday. It was really, it was really like a little bit of redemption for a lot of the stocks that got hammered, mostly big tech across the board. But you had NVIDIA made up some ground to up 10 points. Mongo, which has been kind of a dog lately. Datadog, CRM, Apple kind of, in my opinion, kind of carrying everything. Oracle getting a little bit of redemption. They really hammered that thing the other day. Microsoft as well. And then you had still weakness in like the MSTRs, Micron, AMD, Netflix, and to a lesser extent like Tesla, IBM, and the like. So that was kind of, I mean, if anything, that was really the whole overall story. And then, you had a number of earnings that came out. You had Boeing, I think Lockheed, and you had Starbucks. We'll take a look at Starbucks. I'm not really a fan of Starbucks here. Really, really not a big fan of Starbucks. I mean, I know they're busy when I actually go and drive by any place near me. They're always crazily busy. It did gap up pretty decently after earnings. Let's see, it's 102, so it's up a little bit. I think the expected move wasn't a lot. I think it was like $8 in February, so well within the expected move. If you did anything from a volatility point of view, it came in. It's sitting pretty for you. I actually like Starbucks short here. And I'm not really a big fan of like shorting something like Starbucks because it's one of those weird stocks where if it does anything, it will get like clipped and then they'll hammer it and then it will sit and it won't do anything. And then if it does anything, it may like just creep up higher. I mean, you could look over the last year or so. It's been kind of a bit of a piece of garbage. It's been a crappy stock. I mean, unless you bought it down at the lows in July, you had one big gap up on earnings, and it has not done anything. And we didn't get any real gap up here at all on these last earnings. I mean, up $2 is not anything to shake a stick. Not anything to get excited about, in my opinion. I got this magical line here that we did break out above. I think you're going to see I see a lot of resistance up here at around 107, and I kind of like selling calls over that. But it may be difficult to sell calls because I don't know what the volatility is going to look like after the open today, right? Because we have this pent up volatility in here for earnings. IV ranked 76.4. That's likely going to collapse today on the open. And what I'd like to see is if it does, I don't want to do anything rash, but I think on the open, what I'd like to do is, put on a little put spread in here on Starbucks. But only going to do it if I see this IV rank kind of collapse. I'd like to see it go under 50. And it likely should. And so with that being said, I will actually go out to April. I'm actually going to skip March And I'm going to give myself a little time, and I'm going to go to April on the put spread. And I'm not going to do anything fancy. I'm going to go in the money, right? I'm going to look for the, like the 60 or so delta. And that's going to bring me probably about the 110 or 105. Now, it depends on where they get priced as well. So it's either going to be the 105 or 110. I kind of like the 110, 105 here. But I think it's got, now that I look at it, hold on, 105, 110. So the 105, 110 put spread, you know, it's literally like at 50. So you got a 50-50 shot, right? 50, if it goes down, and it goes down, you know, not much. Doesn't really have to go down that much. You're gold. It goes up. You're out. Really. And you have 78 days for it to kind of not be $100, basically. And maybe for it to kind of erode away and this euphoria of the earnings kind of wear off. I mean, because it really, if you look at it, there really was nothing extremely impressive about earnings for the stock to really move. And so I'm going to lean in short a little bit on Starbucks. I already have stock. I already own the stock. So I could feasibly sell calls. The reason I won't sell calls, though, is, again, when I'm looking at, I got to see where this volatility. It's really important when you're selling, when you're not even just selling, when you're trading options, you really have to look at the volatility because that tells the story. And there's so many people I get feedback that say, you know, oh, I'm buying options and I'm not making any money. I'm buying options. The stock's going in the direction that I wanted to, but I'm not making any money. It's because you're probably buying out of the money options because they're cheap, and you're probably buying options when volatility is extremely high, and then the stock, all right, maybe goes in your direction, but it doesn't move in the direction proportionally to what options you own, and you're gonna lose that game. Because the game that you got to play in options, it's not just about price, it's about time, and it's about volatility. Because and theta will kill you if on out of the money options. It will destroy you. And so so it's really important that you'll always look at volatility. So again, what is high? I mean, usually over 50, but it's relative, right? Some stocks just run at high volatility. So I can't, that's why I don't want to just blanketly say, oh, if it's over a number. What you have to do is you really have to look at volatility from a historical point of view on the stock. So for example, with Starbucks, it looks like volatility runs in about the 30s and 40s. So at 76.2, that's high. And so if I'm going to sell options in Starbucks, I want to make sure that that volatility is higher than average. So for Starbucks, it's probably going to be about 45 or 50. So if it's over 45 or 50, that means volatility is historically high in that underlying. And so I'll sell options. And if volatility is low, basically at 50 or under, I'm going to buy options. And why am I going to do that? Because I don't want to get caught in a volatility expansion or contraction. And then what oftentimes happens with people who buy options, they get caught in a volatility collapse after they buy their options. And not only does the premium erode away, they wind up losing money. And so it's just important that you do that. So anyway, that's what I'm going to be looking at when Starbucks opens. I'm going to be looking for this volatility to kind of collapse down first. So I'm going to wait. I'm not just going to jump in at 9:30 and try and do an order. I'm going to wait till about 10 o'clock and put this on. Now, if volatility doesn't collapse in here, back down to normal, 50-ish, and volatility remains high in here, I may sell some calls. And the calls that I probably sell, I would probably go into March and sell the 105s. Now, I probably won't do them naked. I mean, I'll probably do them naked in my trading account because I already have stock. So if I do them naked, I'm not going to get any hit on buying power because it's basically like a covered call then because I'm long stock. But if you're not long stock, cover it, do like a 105, 110 call spread. That particular call spread has about a 62% probability of profit. You bring in about $140. You use $300 worth of buying power. It's almost like shorting about 14 shares of Starbucks. And, that's likely the trade to do, again, if volatility stays high. And if it doesn't, it's off the table. Now, if you want to increase your exposure a little bit, just make it a $10 wide spread. Don't buy more contracts, just widen the spread. So instead of doing 2 or 3 of the 105, 110, I just widen the spread. I do a 105, 115. I increase what I take in. I'm going to take in almost 225, but I'm going to double my risk, right? I'm almost going to be using $800 worth of buying power, but I save the $4 in commission or whatever it is, $250 or whatever it is. So don't do more contracts, widen the spread. And so those are little 2 options in Starbucks, kind of post-earnings trade, because I tried to get into a trade, and this just like actually proves. I tried to get into a trade I talked about yesterday in Starbucks. I had an iron condor on, and I also tried to do a strangle, and it wouldn't fill. Now, I don't chase things. I put things in at a price, and I'm usually around mid-price. And if it fills, it fills. If it doesn't, it doesn't. And neither of them filled. So they weren't filling stuff, which likely told me that, there was a good indication that the numbers were going to come in around where the numbers were going to come in on Starbucks. And so they didn't fill either one. So I didn't chase it. I just kind of stepped aside. I was like, okay, fine. There's other fish in the sea, and I moved on. So anyway, those are some trades there for Starbucks this morning. Now, there's a number of earnings. I didn't trade any of the other stuff for earnings like Lockheed and what else? There was a couple other ones that there was nothing. There was no there. There's quite a few big, nice ones today. There's quite a few big ones today. So we got Microsoft. We got Tesla. We got Meta. We got IBM. Western Digital. CCI. And that's it. And then everything else comes out in the morning, and none of those look good. None of the ones for tomorrow morning, Thursday morning, they all kind of look like a crap to me. Anyway, like Comcast, Dow, Southwest, Altera. I still call it Philip Morris. I don't know why it's brain dead. But Altera, MO, and UPS, none of those really look alarmingly interesting at all to me as far as earnings. But let's look right at the belly of the beast. Like Microsoft's a big one coming out. And IV rank of 52.5. 52.5. And if you look at that on historically, that's generally relatively high, although there were a couple times this year when it was higher. But relatively, that's high for Microsoft at a 52.4. And it is a stock that doesn't normally run high in volatility, as it's pretty much one of the staple stocks as part of a lot of the indexes. So needless to say, in February, they're looking at a $24 move, and March, they're looking at a $31 move. Now, for earnings, and since it's a binary event, this isn't a swing trade, I'm probably going to do February's. Even though I got 23 days, I'm going to do February's because that is going to be where, and if you look at the implied volatility on here, you're going to get a little bit better implied volatility on the shorter duration than you will out in March. And I'm already in a trade in March, but that's neither here nor there. So expected move of $24 First things first, we start off with the like one standard deviation strangle, kind of give an idea of about what this thing is going to pay. And so a 480, and that brings us to a 415, 480 strangle, well outside the expected move. And that pays $6. Enormous theta on here. If you look at this theta on here, and it's enormous theta because it's a strangle, but 35.6, 74% probability of profit. It is a bit of a margin hog. It is a margin hog by all means, and it usually is. Microsoft always is a margin hog. So you're going to use about $5,700 worth of buying power. Again, it's not entirely crazy, especially if you already own Microsoft stock. Your margin hit will be much less. So if you own stock. So that's what and let's look at that one on the curve. And that is the basically one standard deviation strangle. 415, 480. Now, if we went and covered this, which is likely what I'm going to do, brings us to a 480, 485, 415, 410, and that's bidding out at about $1. You probably do this for $1.50. Now, again, this is one you're going to have to wait till 3:30 this afternoon. Don't do this today. Wait till 3:30. Start trying to put it on. But this is actually a really nice trade. This is actually paying pretty decently, in my opinion. 415, 410, the 480, 485 Iron Condor pay you 150, only use 350 of buying power. Almost a 70% pop in this one. 70% pop. Decent theta for a Iron Condor. And more importantly, almost completely delta neutral. So you can't get any more delta neutral than this trade. And meaning that, hey, as long as Microsoft stays within this range, and it's a high probability it will do so, you win. And there's really there's nothing leaning this bullish or bearish whatsoever. All right, and so that is actually your trade for Microsoft. Now, you want to take on a little bit more risk. You do the same thing with spreads as you do with Iron Condors. Don't add more contracts. Widen the spread. So do a 480, 490, and a 415, 405. Right? That one you're going to bring in 240. Again, probability of profit didn't change. Literally, your delta did not move. You actually got a little more theta because you actually widened the spread, and you almost doubled your buying power just by widening the spread. And that's how you take on more risk. Now, obviously, I wouldn't really go out any further. I mean, if you're going to go out any further than 15, if you go 15 strikes or $15 wide on each side, you're basically doing what I consider like a poor man's strangle. And the reason I call it a poor man's strangle is the only reason why you even have these wings out here on the sides is so that you don't get crushed with buying power. Because remember, we looked at the strangle, it was like $5,500, right? For an uncovered. Oh my God, it's uncovered, it's risky, right? Calm down. Calm down. We've been conditioned by a bunch of retards in the financial community. But yeah, so basically we're covering this so that we don't have this big margin hit. So now you're only looking at 1,600 to basically do a strangle as opposed to 5,500. And you're in a risk-defined trade, right? So, if we want to be able to sleep at night and not feel like, oh my God, it's an uncovered option, right? Like, oh. Dude, not a big deal. So anyway, that's how you do that. And this would probably be closest to like a strangle as you can get. And you can see with that, with moving it that wide, you bump the pop up to 71%. And you could probably do this one for 360. And again, if you have that buying power in your account and you want to take on that risk, that's actually a nice looking trade. You know, as far as statistics and everything else, I mean, you can't, to me, you can't really beat that one. So those are the three options in Microsoft, right? You have the strangle, you have the traditional iron condor. Actually, there's four. You got the traditional iron condor, you got the $10 wide, and you got the $15 wide. I really wouldn't go any further than 15 because once you start going to 15, might as well just do the strangle. Because at that point, it doesn't even pay to have those wings on there. Just suck it up, do the strangle, and have a nice day. Suck it up, Buttercup. So that's kind of what's going on in Microsoft, and that's how I see it kind of playing out. Now, the other thing is, too, is like you really got to be conscious that, look, if Microsoft's trading at 446 right now, if it moves, if it goes up $10 today or it goes down $10, you got to adjust this. Right? You're going to have to adjust this. You may have to move this down a couple of strikes. You may have to move the calls up down a few strikes and vice versa. So you have to be a little fluid in this. Don't be like, oh, well, listen. No, you have to be fluid. If Microsoft's price moves, you have to adjust this to take account for that because we've got a whole trading day ahead of us before we put this on. So anyway, that's kind of what's going on with Microsoft with earnings. And you're going to see Tesla is going to be very similar to this. Tesla, how are you supposed to say it? Is it Tesla or Tesla? Or Tesla or Tesla? I have no idea. Anyway, same thing with Tesla. I'm going to be looking at February. I'm not going to go out to March. I'm going to go out to February because you're going to get a little bit higher implied volatility. Looking at a $50 move. Now, we all well know that Tesla can move well more than $50. So the one standard, let's do the one standard day first, strangle. One standard is going to bring us to the 325 to the downside, and then to the upside, it looks like 470. Now, you could see Tesla is literally a margin PIG pig. It is a slob. It is an absolute slob when it comes to margin. But in this case, right, if you do the 470, look at this on the curve. You do the 470, 325, all right, it's going to use $8,500 worth of buying power, but you're going to bring in $1,165 of credit on this. And also, I mean, so if you have the buying power for this is actually an extremely sexy trade, in my opinion, because, look, you're getting almost a 72 theta in this. This is actually skewed a little delta negative just on where it's lying on the chart. Here, it's about 9 shares short Tesla. You know, again, this is one standard. This is one standard deviation strangle. So it is actually leaning a little delta negative on this one, but 76% probability of profit. That is very nice. But look, I don't want to look. I'm just like anybody. I don't want to tie up $8,500 on one freaking trade. That's insanity. Now, you know, you could do it, but you know, who wants to do that? It's not feasible. I mean, for me, it's not. No desire to do that. So the likely trade here for Tesla is the 480, 470. I'm going to do a $10 wide right off the bat. And so for demonstration purposes, though, I will do the $5 wide strike just for demonstration purposes, and I'll fan it out. So the trade for earnings on Tesla is probably likely going to be the 470, 475. If we can fit it. Yeah, the 470, 475, 325, 320 iron condor in February. And that's going to give you almost a 70% pop. You're going to use 370 buying power, and you're going to bring in $1.25. And that one is completely delta neutral. Amazing how a little bit of buying premium will do to a spread. So there you have, that's kind of like step one. Step two, right? Obviously move it out to do the 325. This is likely the one I'm going to do. I'm likely going to do the 470, 480. And that one should bring in 240. It's got a true 70% probability of profit, and buying power 761. Good theta on this too for an iron condor, almost 10, about 8.5. That's pretty decent. And again, these are the February options that expire in 23 days. Oh my God. What if I get assigned? You're in a risk-defying trade. What do you care? You don't care. You already know you're in a risk-defying trade. So who cares? Right? Who cares? It's not the end of the world. Get assigned all the time. It happens. The unwritten issue with options that nobody in La La Land ever talks about. So anyway, that is kind of where I'm sitting with Tesla on this trade. Now, the trade that I do like on Tesla, again, I'm going to reiterate, if you own stock in Tesla, I like what is called a Jade Lizard. And the Jade Lizard is actually something on the Tasty Trade platform. And I like the same strike on the puts, or similar. I'm not going to say I like going a little inside. I'm going to skew this a little bit. And I like going 30. It's about the 13 delta, the 330, 335 put spread. So you're going to sell a put spread. You can do this all as one trade. You can do this on Tasty Trade as one trade. And this is if you own stock. You do the 335, 330, and then you sell you're going to sell the 470. And then your stock will cover, and you should have literally no margin hit at all. Your margin hit should be like $100 or $200 if you own stock. You're going to bring in $850 on this. You got an 86% probability of profit on this. You have an incredible theta of 46, and that is the Jade Lizard. And basically what that is you sell a put spread, sell a call. Sell a put spread, sell a call. And that's a long Jade Lizard. Now, obviously, a short Jade Lizard would be the opposite. You sell a call spread, and you sell a put. But you only, again, I always say to do this if you own Tesla stock. Because if you own the stock, you'll actually reduce the margin. All right, and it's almost like you're doing a covered call and you're selling some put premium. All right, so there's two trades: Jade Lizard, Iron Condor. Two Iron Condor. No, I'm just going to do the one. So Jade Lizard or Iron Condor. Meta. I don't know if I'm actually going to trade this one. Ivy Rankin here is. It's okay. I think it's a little low, in my opinion. I think it's a little low. I mean, the stock itself is at its highs. I'm not really a fan of this one for earnings. So I'm not even going to, I don't think I'm going to do anything with it. And if I do anything, I might be like a bit of a pansy with it and maybe just sell a put spread or something. Like maybe a greater than one, maybe go down to like the 10 or 12 delta and sell like a $10 wide put spread and be kind of a pussy. Not really bring in a lot of money. Like maybe the 590, 580 put spread looks pretty decent to me for earnings. That's about it. I don't know if I really feel... I don't know. I'm a little scorned on Meta selling calls. I've gotten run over so many freaking times on that stock. selling it short, and it's not. It's left scars in my trading path. So I don't know. That's really it. I don't even want to talk about it. I don't. Western Digital, I really don't have anything in here, even though volatility seems to be relatively high. I don't know what they rank this as far as liquidity. Yeah, I don't think this is not a very liquid stock. Let's go and look in the February's. Now, this stock is not very liquid. I'm surprised it's even on the list. And then, again, when I'm talking about liquidity with Western Digital, look at the open interest in February. You have an earnings month, and you literally have like maybe a handful of strikes that even have open interest, but then you have a number that have like nothing. So that to me is alarming. There is definitely some size trading down, though, here outside the expected move. Like, look, there's 5,500 contracts down at the 55 puts. And then I would assume back up over 70, there's probably some, you got some size up here. It's probably Sosnoff. But you have some size up here at the 70s. But I don't know. This stock just never really has done anything for me. Like, I don't know. I'm not a fan of it, especially trading earnings. IBM. IBM actually this is probably, I think, maybe the earnings trade of the day. IBM looks better from a volatility perspective than all the stocks combined. Microsoft, Tesla, all of them. And if you look here, IBM is running pretty high. In fact, I think it's about to break its record this year at a 91.5 IV rank. I'm definitely going to do February's. Let's do the one standard D. The one standard D's got a 202.50, so they have $2.50 wide options. How about that? So and actually not really a margin slob as I had thought it would be. So the 202, only problem with the 202 is no open interest. See, that actually will keep me out of that. Again, folks, you got to look at this stuff. So when you're putting on trades, look at the open interest before you put it on. So in IBM, I don't like the 202. I'm going to go to the 200. So I'm going to do the 200 because there's better open interest there, a little better liquidity. They must have just added these $2 wides. That's why there's probably not a lot of open interest, but I don't want to get caught in something that's illiquid. And on the other side, I'm going to go up to the 250. So it's going to go outside, not only outside the expected move, but expected move is $18. Not only go outside the expected move, but also go outside the one standard deviation. And so the outside the one standard deviation strangle, 76% probability of profit. Not much theta on this. I'm actually a little surprised. Only a 21. I kind of expected to be a little higher than that. It's a little skewed delta negative, but not horribly. And that's going to use $2,200 worth of buying power, bring in 335 credit. So that's actually not a bad trade. Again, if you have the margin. And I know there's a million people out there saying, oh my God, you're using $2,000, blah, 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 to make 300. How many times does somebody trade a futures contract or somebody trades some options? They trade 10 options and they use $2,500. And nobody winks an eye like, oh, okay, that's how much they use. And then that's all this is. This is the same exact thing as doing that. It's just I'm doing it in a way that most people just aren't comfortable with. It's the same thing. What's my stop loss on this? My stop loss on this is that I have flexibility. If this blows up on me, and I've told this many times to people, if it blows up on me, I roll my calls out to March. I roll my puts up. If it goes up, I roll my puts up, right? There's a whole, watch Tasty Trade. There's a whole mechanical exercise you go through when these trades go the other way on you. And it works. It works. And I'm not going to go over that here because I just don't have the mental fortitude this morning, and I'll be here for another 3 hours if I start talking. So anyway, that's kind of the trade I like for IBM is the 20 to 250, 200 strangle. IBM has been known to move on earnings, especially of late. And, that area looks pretty decent, right? Because you got pretty much all-time highs here at 239 and change, right? Good base of support kind of came in at $200. So even technically, from a chart point of view, right? Not that even matters. So there's my trade. So again, here's this trade that I'm going to do because I have the margin to do it. But if you don't, just cover the trade. So here, let's go and look at the Iron Condor. So that means you're going to go buy the 255, and this one's going to be a nice trade too. And then you're going to buy the 195. And likely you'll be able to do this one for probably about $1.05. 72% probability of profit. Now, the other thing about these trades is this is either going to I'm going to do these trades, all these earnings trades. And then when earnings comes out tonight, right, the bubble's going to pop. And what I mean by the bubble is going to pop, this IV or volatility is going to collapse. It always happens, no matter what. That is what happens after earnings. You have this pent up binary event. So volatility is getting built up in here because you have people, traders out there buying both sides. Oh, I think it's going down. I think it's going up. So you have that going on. So tomorrow, Thursday morning, this volatility is going to collapse on the open. And so likely by about 10 o'clock, you're going to take these off. You're not going to, don't hang in there. Don't be like, oh, I didn't make as much. I thought I was going to. No, things up 40%, 30%, 40%. You made some money the next day. I mean, put that in perspective. And it comes in, you're out of this 10 o'clock tomorrow morning. That's it. It's over. Have a nice day. Or you're managing it, right? If it blows out, if it gets blown out, you're going to have to do, the whole rolling thing and, whatever else you want to do. Or if it's just a outright loser, then just dump it and get rid of it. Don't hang in there. Don't hang in there. That's all I'm saying. With any of these trades, they're going to come in tomorrow. They're either going to be winners or losers. And then for the most part, by 10:30, you're going to get your volatility collapse and you're going to go on and have a nice day and have a life of religious fulfillment after that. And that's it. Don't marry these trades. Don't hang on to them till expiration. You're done. And that is about it as far as my session today and with earnings. That's because there's really nothing else. I think is today I don't know what's going on economically. Isn't there Fed bullshit going on today too? I think. Isn't there some garbage? Now, we do have some numbers. Let's see, building. No, what is today? Today is Wednesday. Let's see, Wednesday, mortgage, bunch of other bullshit. Goods trade balance. Oh, yeah, I'm waiting for that one. Wholesale inventories, yeah. Crude oil, blah, 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 blah. Yeah, there's, yeah. Oh, Fed press conference. That's right. Interest rate. They're not doing anything, right? They're not going to do anything. So we already know that. I mean, I guess if they do something, if they cut, then that would be a surprise. I don't think they're going to do anything. And all you're going to get is Powell blathering his whatever he blathers at that point. And then the market probably after 2:30 today will be untradeable until we have to put our trades on. So there you have it. And that's it. So anyway, that's it. Good luck. And again, don't put any of these trades on until after 3:30 today. All right. And then if you want to know, and those people out in TikTok land, if you go over to YouTube, you could find me over there. I'm over on YouTube, and this will be recorded. All right. And so that's it. That's all I got. Have a good one. And trade them tight.